Hang Seng to start off actually seen quite a slip because it was holding well in the green for a better part of early trade.
Inflationary impulses due to the jump in this 5% jump. I think we need to wait and watch.
The 21% or so the growth we saw this year. This was despite the semiconductor issues.
Looks like there's some follow-on buying this morning as well. There you have it, 55 points in the green for the Nifty.
My feel is that next year also we will see a lot of volatility based on events.
1st January 2027, everything should be market determined.
The industry has been only clocking a growth of only 12%. So overall, I think it has been very, very good for us.
We had highlighted that we expect this ratio to moderate, given that globally we are seeing higher interest rates.
Friday was a solid session for our markets, but today things are fairly quiet at the index level.
Our margins usually is on the better side in the low teens as of now, and could go better into the future.
We need to see more volume participation, but as of now, a lot of price participation. Larger stocks are seeing a lot of interest today.
You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here. And of course, Nigel is sitting in the newsroom. Guys, hi, good afternoon. It's an absolutely quiet kind of day. And really no excitement, no pull, no push. Just kind of middling into the close. So far, of course, things could change in the last hour or so. But it doesn't look like it. So just a quick few things before we sort of get the ball rolling. As I said, it's an absolutely flat session. But sectors are doing well. Some sectors are under pressure. The sectors which are doing well are autos, PSU banks, real estate. The sectors which are under pressure are FMCG, IT, metals. The small cap index is doing well. It's up about 0.75% the last I checked. And, the advance decline consequently is up. It's about 3:1 in favor of advances. Mid caps are flat. The mid cap index, the last I checked. Global markets are also quiet. Asia was more up. Europe is more quiet. And global markets, of course, will keep trading, even though tomorrow it's a bit of a market. It's not a bit of a market, it's a market holiday. And there are two of them this week. So generally, volume activity, etc. Also, if you look at the list of top gaining stocks in the broader market, are they being pushed by a lot? Are they supported by a lot of volumes? I would say just a cursory glance, perhaps the answer is no. So volumes perhaps also slightly on the lower side. Rima.
Hi, it's a short, but it's a very important week for our markets. And for the day, as you pointed out, things have been very quiet and flat. The Nifty's just moved in a 115-point range. Well, it sounds like a triple-digit move, but in terms of percentage, that would be just about 0.6%. The good part is from the dip that we had around early morning, the markets have recovered close to about 50 points. Broader markets are outperforming. The mid-cap index is up 0.4%. The small-cap index is up 0.6%, 0.7%. But the small-cap index has slipped from the top of the trading session by close to about 0.6%. So basically, the small-cap index had a gain of more than 1%, but that has whittled down to just about 0.5%. The advance decline ratio continues to hold up in favor of the gaining side. So we've got nearly 2,300 stocks in the green for about 600 stocks currently in the red. IT continues to remain very, very nervous, maybe ahead of the earnings, which kickstart from next week. And this time, Surabhi, there is so much uncertainty. Well, I've been tracking IT now here for 14 years. Okay, so in TCS, I was looking at the numbers and expectations. The constant currency, quarter-on-quarter range for TCS ranges from 0.4% growth to 1.7% growth. Wow. It may not seem a lot to you, but generally in IT, there's a fair amount of consensus, and you do not see such a wide range.
Especially the largest names, and you're saying this is for TCS.
Yeah. Exactly. So typically you would have, a 0.4, 0.5% kind of a variance. Yeah. But this time it's from 0.4 to 1.7%. I've never seen such a wide, variance and divergence in the expectations. So clearly there is a lot of uncertainty going into the numbers, what these companies are going to report.
And report, and more importantly, what they're going to say as well. Yes, especially with this all-important US market and what's happening with the big, chunky BFSI vertical there, right? So IT obviously is a watch point. Two more sectors that have made it to the news today. One is autos, and the auto sales report card is more positive than negative, and therefore there's been consistent buying through the day. If you're looking at a Hero Moto or a Maruti, most of those names, even Aisha for that matter, auto is on the upside today, and that's the one pocket of the market that has actually been consistently taking things higher. That's Maruti for you. The next is the oil and gas play because of what happened to global crude oil prices with the 7-8% surge in the morning. By the way, Brent was still up 4.5% last I checked. And the result is that the upstream producers, pull up ONGC or pull up an Oil India, those stocks have been positive right from the morning, and that trend is intact, pretty much intact right now. There, look at that surge. Make it 5.5% on Brent now, not 4.5%, because of the surprise production cut that OPEC Plus announced. So ONGC's lost its morning gains. Oil India is holding on to more of them. And then comes the city gas distribution play, where the cuts are pretty deep if you're picking up, let's say, a stock like Mahanagar Gas. Even IGL is down. Gujarat Gas marginally lower. And that's because of lack of clarity on the Kirit Parikh recommendations. The market anticipated that they will be in place by the 1st of April, but that's not happened, at least so far. You will hear a lot more about this as we go forward. But in terms of just sectors which are making it to the headlines and also stock price action moves, it is perhaps these two. Nigel, how are you seeing the market today?
Well, just waiting for an hour or so and then you're off again into the dressing room, right? I mean, what a good week to come to the office. But, on a serious note, since it's a truncated week, it's always the best time for writers. So whether it's a call or a put writer, they're going to be very, very happy because we've got tomorrow holiday and you come back on Wednesday and the weekly expiry plays out yet again. And by the way, you'll have the Nifty Bank expiry that will be playing out in the final 55 minutes today itself, because tomorrow is an off. So remember, normally it happens on Tuesday. That's going to happen on Monday. And the expiry that normally takes place on Thursday will take place on Wednesday as well. To pull up the Nifty, couple of strikes that are very active. 17,400 put, very active. The premium is down sharply out there. Even on the 17,500 call, well, out there as well, the markets are more or less in a range, and the premium out there as well has eroded because the time value of money is eroding out there. So the markets can stay in this range of around 17,200, around 17,500 just for one session, that's today. And on Wednesday, then the writers will be going home with bulk of the gains. And the other point that I made earlier today as well was that April historically is one of the stronger months for the broader markets in comparison to the Nifty. So if the Nifty falls, the broader markets fall less. At least that's what history suggests for the last 10 years, barring 2019. So the odds are in favor of the bulls for a broader market outperformance. Let's see how this plays out.
Okay, thank you very much for that. Yes, we're all waiting for that 1 hour to go, and that perhaps explains the low volumes that we are seeing today. Here's what's lined up in the next 1 hour for you. Gas stocks, MGL, IGL correct after the government keeps APM gas price unchanged till further orders. The street was expecting Kirit Parikh committee's recommendations of a price hike to be accepted by the 1st of April. Key excerpts from our conversation with Kirit Parikh lined up on the show.
Mid-sized banks are reacting to their fourth quarter business updates. All the details coming up. Karnataka under pressure, CSB and some others like Dhanalakshmi doing better. All the details in just a bit.
A whole host of stocks like GMR Infra, Policy Bazaar, KPIT Tech are buzzing in trade on the back of recent brokerage notes.
We'll discuss portfolio positioning and the strategy ahead in the market with Dinshaw Irani of Helios Capital. He joins in the next half hour. All this and more over the next 60 minutes.
Okay, all right. So that's what's lined up here. It's a packed show as always, but it's a bit of a Thanda market. 18, 19 points, 17,380. How should you position yourself in the last hour of trade? Mitesh Thakkar is with us to run us through exactly that. Mitesh, good to have you with us here. Thanks very much. So any positional trades on the Nifty from here out? And what would your stock-wise trades be?
Yeah. Prashant, in the morning, I think, we did highlight that any intraday dips closer to about 17,300, 320 would be the buying zone. We got a dip which made a low around 17,312 or thereabouts, and I think that was a good entry point because overall the the immediate term charts, which is the intraday hourly and the 2-hourly chart, which I look at, they're all positively biased, which means that while there was some profit booking at higher levels closer to about 17,450. I think the push will be more on the upside in the near term. So good chance we'll head towards 17,450, 500. And if we clear this zone, then maybe even 17,700, 750. So stay positive. Use declines to buy into if you haven't bought already. Still, you can participate by buying call options and selling options beyond the 17,800 level. So you can do a call spread, bull spread, something like that. That'll help you get some positive delta. But that apart, I think on the stock side also, we've been advocating trading or identifying long opportunities when stocks are just breaking out, they're getting past their 10, 20-day averages. So broadly, the overall bias is very positive. And I think till we start getting below 17,250, no reason to cut or reduce your long exposure. On the stock side, I have Coal India that's reversing with good strength. That's a buy with a stop at about levels of 215 for targets of 230. And Delta Corp, a slightly high beta, but a stock which is reversing from extremely oversold levels. That's a buy as well with a stop at about 182 for targets of 196.
Okay. Thank you for that. Let's talk about GMR Infra. That's surging in trade on the back of a Kotak institutional upgrade. Vivek is here with the details. Vivek.
Well, that's right. So GMR Infra is the stock, it's been buzzing off late. Stock's been doing quite well. So quite a bit of news flow, especially towards the end of FY23 as far as the company is concerned. Significant fundraising as well as group simplification is something that is aiding or unlocking value as per what, Kotak Institutional Equities is saying. Now, first, having a look at the news flow itself, the company recently raised close to 2,900 crore via the FCCB route, and the conversion price for this particular, fundraise was at 43.67 rupees a share. Along with that, the company also said that it is looking to merge its subsidiary GMR Airports Limited with itself, which is the airport platform unlisted entity. So now GMR Airports Infra becomes the airports listed entity, and the group simplification works in a manner in which the shareholding comes to the GMR group at 33.7%. The group ADP from France holds around 32.3%, and the public shareholding, the remainder, is around 34%. Now, what is Kotak Institutional Equity saying? They're saying that, number one, they have a buy rating on the stock with a target of close to 45 rupees. They're saying that GMR has now delivered on its promise of simplifying the group structure, and Group ADP will be bringing in close to 3,400 crore of investment into the consortium. So this particular simplification leads to access to lower cost capital, which they believe will lead to significant savings and also improved upstreaming of cash flows. So what they've done is they've retained the value of the existing airports and increased the fair value of the stock on higher value of the new airport wins that GMR is expected to get.
All right, got that. Thanks, Vivek, for the details. Not that there's much upside left from Kotak's target. I think their target is 45, stock's already at 43.5. The question is, can it build more momentum from here? Well, Deepak Shenoy, founder at Capital Mind, is joining in to answer questions on GMR and, of course, the market and so many other stocks. Deepak, thanks for joining in. Good afternoon. Hope you're having a good Monday. Just taking a shot in the dark, have you had a look at GMR, the kind of corporate restructuring they're doing? Any thoughts here?
No, in fact, I just heard about it from you, so I was actually doing a search to find out what the restructuring is all about. So, sorry, I don't have a comment just yet.
No worries, Deepak. So let me broaden the question to other infrastructure plays, because if there's one thing that's been quite consistent in this market is that there's been very steady order intake. Every day we get these announcements on, L1, whether it's a road contractor, EPC company. So if you are convinced about this space, what company or stock would you pick?
So I think there are three areas here which are of interest, especially when it comes to infra. There's road, rail, and defense. So if you look at, these are not infra, but it's just the spate of orders that seem to be flowing in largely from the government. I think infra is in a good place right now because the government is starting to, is continuing the spends that it's got. It's got a fairly large budget for both rail and for the road infra. We've got very large orders coming in for relatively small companies, and some of them we own. So, there's the rail companies. RVNL just announced a bunch of orders. There's been a lot of order flow even into defense companies. Defense, again, is an import substitution model where instead of importing either ordnance or certain other things from abroad, you're trying to make more here and then giving orders to companies, both public and private. So I think the play here is that if you're in this space and the fear that you won't get paid, which is what the fear was in most government, companies that got money from the government, if that fear goes away, and by and large the government has eased that a lot in the recent past, I think these are very interesting companies available at relatively low valuations. But, and I say this again, a lot of these companies are mired by corporate governance issues, especially in the private sector, some also in the public sector. So I would be very careful to say just blanket go buy. It's going to be a more nuanced play. You have to find players that can actually expand their capacity and have decent corporate governance. Not taking names at the moment, but that's one of the things that pitfalls we have to watch out for.
Surabhi, the new orders that you're talking about, right? CMI puts out this order at the end of every quarter. The data shows, and this is very interesting, new project announcements from CMI. And this is basically, if you announce a project, they will pencil it in. Right? That stands at 12.3 lakh crores. So it's a big number. It's up 36% on a year-on-year basis.
This is for the quarter?
This is for fourth quarter. FY23, the quarter which just ended. That's fantastic, right? But guess what? A majority of this is driven by those orders which Air India placed with Boeing and Airbus. That's 5.7 lakh crores was just that. So if you exclude that, I mean, those are real orders to be sure, but those will be delivered, I'm assuming, over a very long period of time. Right? If you exclude that, then the new project announcements, as CMI defines it, is down 37%. Down 37% on a year-on-year, which is Q4 23 versus Q4 22. And is down 17% on a quarter-on-quarter basis as well. These are some high-level numbers. We'll have to go. I mean, some companies will do better, others will do badly, but this is like a big top-down number.
Well, good you brought this up. I think we should get Mr. Mahesh Vyas on to explain this, because from the company's standpoint, whether it's RVNL or BEL or
Bharat Dynamics, this covers defense, right?
Maybe this is extra.
This covers everything. All new project announcements. I mean, it doesn't have to be sort of commissioning or. You don't want to start spending anything. Any companies, for example, this number used to be hugely influenced by these state investment fairs, right? Because companies, you'd say, they'll just make an announcement saying, we'll spend 1 lakh crores or 2 lakh crores.
At these summits, state summits.
But obviously, a small fraction of it materializes, 1-2% or so. I mean, it's proven. We have the data, but it all gets captured here. So in that sense, I mean, it's down some, as I said, 37%, adjusted for that big Air India order. But I think Nigel wants to come in. Nigel.
Yeah, we want to discuss the next stock that we're talking about, PB Fintech. That stock is under pressure today on the back of a CLSA note. They've downgraded the stock. Yash is standing by to give us more details on that. Yash?
Well, Nigel, it's quite an interesting take which CLSA has taken on PB Fintech. They've downgraded their rating on PB Fintech stock to outperform from the buy rating which they had previously. But they've raised the target price to 710 rupees per share from 660 earlier. That's a potential upside of about 36% on the stock. What CLSA says is that the stock has rallied about 60% in the last 5 months itself, and that is largely because of two reasons. One is that the company has demonstrated a path to profitability, and the second one, pressure from selling shareholders has eased. Now, what qualitatively they've said about the company is that lower burn rate and new initiatives will aid faster break-even. Also, the key value driver, according to them, will be the growth in the platform business. As far as valuation framework is concerned, they've said that the premium share is expected to increase to about 4.6% and 8.4% by FY26 and FY40 from the current 2.1% currently. They expect a 33% CAGR for the insurance premium business between FY23 to FY26. Importantly, CLSA says that the new initiatives will not be a game changer for the company at this point of time, but the recent regulatory changes coming from IRDA, they spell positives for the company. Importantly, they've highlighted the fact that what needs to be monitored for the company would be disruptive regulations like Bima Sugam.
Okay, thanks a lot for that, Yash. Deepak, you heard what Yash has to say with regard to quoting CLSA. What's your view on the stock?
So I think, it's one of those stocks where I think there's a large amount of investor selling has happened, and I think there is still a bit to go, but they've paused for now. So that's kind of taken the stock price down quite considerably from where it listed. And one of the other issues is, of course, there's got to be a point where they started to earn profits. And some of the regulatory initiatives, like they talked about, one, Bima Sugam is negative because that would be an insurance play, field play that will actually compete and perhaps provide alternatives for investors to be able to use that to buy insurance policies rather than directly using a place like Policy Bazaar. But there's also the other regulatory changes that allows them to operate in a much better manner, frees up commissions a little more, and provides them a little more opportunity to negotiate. I think this is in general, the business has a very good long-term potential here, given also that competition is relatively low. But I feel here that the valuations are a little bit stretched, even where they are today. And unless we can see those supernormal profits at least visible on the horizon, that it would be difficult for this play to kind of find its trigger to move up considerably from here.
Okay, Deepak, do stay on. We need to slip into a very short break, but with the news that the Nifty is now pushing towards the 17,400 mark, the sensex has gained close to about 100 points. ICICI Bank has climbed to the high point of the day. That's up close to about 0.8%. Tech Mahindra has recovered all its morning losses and now back in the green. So from the day's low, Tech Mahindra is up close to about 1.5%, and many other stocks, HCL Tech, State Bank of India, Asian Paints, all at the day's high. Get into a break. We'll come back and pose a few more questions to Deepak, and we'll also be joined by Dinshaw Irani from Helios Capital India.
ICICI Lombard BFIT कवर से सारी मेडिसिन कैशलेस मिल गई।
कैशलेस मेडिसिन झूठ की वे खाद होती है मास्टर जी।
ICICI Lombard Health Advantage Plus के साथ BFIT कवर जो दे मेटर्निटी कवर, कैशलेस मेडिसिन जैसे फीचर्स। It's unbelievable but true.
The stage is set for India's largest ever theatrical production. A visual marvel unlike any.
Welcome to the home of the arts, artists, and the audience.
Neeta Mukesh Ambani Cultural Center presents the great Indian musical Civilization to Nation. Book your tickets now.
कैसे करते हैं ट्रेड? Drive 5 पैसा. Upcoming corporate action या news flow. किसका हुआ merger? कौन है नया CEO?
Financial data मिलेगा अब हाथों हाथ. Fundamental analysis से अब बनेगी बात.
जानो हर स्टॉक जो है ट्रेंडी, टेक्निकल एनालिसिस से भी लगेगी फ्रेंडली. क्वार्टरली रिजल्ट्स होगी सेंड, लक बाय चांस इन्वेस्टिंग का होगा दी एंड.
With 5 पैसा's in-depth company information, always stay up to date.
ऐसे करते हैं ट्रेड.
सोच मत छोटे. Install my investment in securities market are subject to market risk. Read all related documents carefully before investing.
The commodity markets are in a bull run of sorts.
Whenever the world moves from a recession to growth, there is a surge in demand for commodities,
Where crude, sugar and metals are surging. Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Has the Indian investor warmed up to commodity in their portfolios, and are there enough instruments available?
Get the complete lowdown on commodities, all the exclusives with analysis and experts from across the world. Commodity champions at these times.
Welcome back. Well, the markets are picking up some pace now as we speak. You know, we're moving higher as well. We're moving back to around that 17,400 odd mark. And the Nifty Bank, that's the one that's playing out the expiry today because tomorrow is a holiday. And for the Nifty itself, it will play out on Thursday. So just keep that in mind. The Nifty Bank has moved higher, and that's what's helped the Nifty as well move to the high point of the day as we speak. But from the broader markets, one stock that's got hit very, very hard in today's trading session is KPIT Technologies. We'll just get to that in just a bit. You know, there's a brokerage note that came in there, and that's why that one's down close to around 10% odd. Well, Nimesh joins us as well. Nimesh, this clearly, you know, the street is very, very worried by this brokerage note. The standout brokerage of the day having a big, big impact on the markets.
Stock is down 15-16%, right? The last one I checked. So, see, again, you know, I just want to put it very clearly that JP Morgan is not highlighting any big negatives or from a fundamental point of view, they're not raising big questions. The key concerns for them is largely the valuations at 50 times 1 year forward earnings. That's been the key trigger. If you look at, you know, JP Morgan's track record in the ER&D space, they have been cautious in most of the stocks, barring Persistent. I was looking at the report. They have a underweight rating on Tata Elxsi. They have an underweight on L&T Technologies as well, and now they have initiated coverage with an underweight rating on KPIT Tech as well. But the fact is, if you look at the street, you know, the brokerage reports, there is hardly anybody on a sell side. I think JP Morgan is the first large institutional broker having a sell rating on the, underweight rating on the stock, and a target price of 520 is the lowest on the street. I last what I checked from the Bloomberg data. So nobody is as close as to 520 what JP Morgan has put out. So that's the number. Now the key, the two key de-rating triggers for KPIT according to the JP Morgan note. There are two catalysts what they've highlighted. The one being the slowing growth beyond FY24. So they expect the growth to slow down sub 20% post FY24. So that's a big reason for them to be a little cautious. Also, they believe that the scarcity premium will go away with the IPO of Tata Technologies, which is a competitor, and there 88% of the revenues come from the auto vertical. So that's going to be a second play for a lot of investors as well. So that's one big reason. The other reason is JP Morgan believes that for the growth to sustain beyond 20%, KPIT will have to keep getting a lot of large orders and every year for that growth to sustain. So that is going to be a big risk because auto is a cyclical industry, and that's a bit of a risk for KPIT as well. So that's the reason why they have some doubts on whether this earnings momentum, the growth momentum, can continue. They like the story. They are happy for the fact that KPIT is focusing on fast-growing auto vertical. But at these valuations, they are not very comfortable, and they'll wait for right entry points to get into the stock. So again, the fact is the biggest concern is largely on valuations at 50 times for forward earnings, and they have been cautious on the entire space, and now they've initiated coverage on KPIT with an underweight rating and a target price of 520.
All right, thanks a lot for that, Nimesh. Well, let's get in Deepak Shenoy then. Deepak, what do you make of the stock? As Nimesh said, the problem is in valuations that scarcity premium could go out once Tata Technologies comes and gets listed, and also now they have to grow at more than 20%. Fresh big orders need to come in. How do you view this stock? It's been a darling, but it's down 15% in today's session.
Well, I think today's session sounds like, a 15% down is a crazy move, but I don't know if I can explain any of that through fundamentals per se. But, if you look at the auto market and the fact that there's been so much growth in the auto market, much of it has come from, say, a combination of hybrids, electric, and a lot of stuff that goes around with it as well. Maybe some part of that, the early order intake, will not be able to be matched in terms of growth by what may come in the future. So plus there is this pressure, right? So there's potentially higher interest rates in the West, which are going to cause at least some kind of a slowdown in terms of orders for new cars, and it will also possibly cause, with the heavy inflation that's already in place, it might increase the price of cars, and alongside the interest rate increase, we might actually see a slowdown in orders for the car industry as a whole, and therefore probably downstream for KPIT as well. I believe here again that the company is sound, but valuations are a little bit stretched. 62 times past 12 months. The forward may still be a very high multiple, and you have alternatives now in broad engineering spaces, even in broad IT. Where I think they're more diversified and therefore not dependent on one sector. So you might see, I don't think it's the best bet going forward. Maybe a small part of an IT focused portfolio.
Okay, all right, Deepak, got that. Thanks for the quick call on KPIT. With the stock having run up the way in which KPIT did, perhaps today is just, the report became an excuse for a lot of people to simply head for the exit door and book their profits. That's KPIT Tech. Deepak, just wanted to get your thoughts on some of the auto names. We've got the sales numbers in, and I think the market's rejoicing that there's no nasty surprise at least. But given the clouds on the horizon, whether it's El Nino or whether it's, sticky inflation, high interest rates, how would you look at the two-wheeler makers, Bajaj, TVS, Hero Moto, even Maruti for that matter, because Maruti is sounding quite cautious on its passenger vehicle forecast?
I think for Maruti, the interest rates matter because a lot of cars are financed, but I don't think so many two-wheelers are financed. And in general, we've seen that the SUV and the MUV categories have done better in passenger vehicles in the four-wheelers. But bikes across the spectrum haven't done quite as well, regardless of whether they're high end or low end. So we're at this point just waiting. It's been 5 years now past after 2018-19 when they increased the insurance costs for sales to even reach that level of 7 lakh bikes, which I think Hero MotoCorp did at that time, and I don't think it's come anywhere close since. We've not seen this, this long hiatus for a long time. I hope these El Nino predictions result in, more sunshine equals more rain. It's looking cloudy in Bangalore here for a change. But, I would say at this point, it's just, let's wait for the data to show that, sales are picking up, sales aren't picking up. We have some investments in the sector, but it's been a long and difficult ride, and I think at this point I'll still wait for the rural demand to pick up for two-wheelers to move. So we don't have a two-wheeler company in our portfolio yet, but I think I'll react to data rather than try to predict it right now. It's been 5 years, haven't been able to get it right.
Deepak, by the way, correct me if I'm wrong, but you folks are using the powers of Chat GPT to backtest a lot of your theories. That's correct, right?
Yeah, that is, Prashant. We've actually told everybody in the company that they can get themselves a purchase paid license for Chat GPT 4. I don't think it helps us just find the things, but the idea is to help you use it to help us write the right kind of either marketing content or analysis frameworks, or even write code to analyze and backtest the data. So it's been an interesting ride.
And so far it's been promising, the results that you've seen?
It's scary because, one day this thing can replace me. So,
or us.
Just scary.
No. Well, until then, at least we'll enjoy our conversations. One day everything will change, Deepak. But till then, we're here.
Absolutely. Deepak, thank you very much. Good speaking with you. Appreciate you joining in. And thank you for taking out the time. Well, Dinshaw Irani is joining us now, Chief Investment Officer at Helios Capital India. Dinshaw, great to have you with us here. Thank you very much. Good to see you working and not, on a long weekend, extended weekend. So, Dinshaw, how are you feeling about the market? Things looked up a little bit, and then, something or the other always crops up. 3 weeks back, it was this entire bank thing. This morning, it is a big jump in oil prices. But overall, how are things looking to you?
So, Prashant, thank you for having me on your show, and a very good afternoon to you and your viewers. As Gordon Gekko had put it once, money never sleeps, so I don't take much sleeps anyway. But anyway, so the fact is that we've been calling this out, Prashant, for a while, that we expect the markets to stay in a band. And I don't think that thesis has changed. However, the recent turmoil that one saw in the the mid-sized banks in the US, there was a silver lining to it, actually, because the aggressive increases by the Fed, I think that will take a backseat now. And the Fed also has realized that it's putting too much stress on the balance sheets of the banks, and that's why it's taken that stance that probably there'll be one more hike. In a way, it helps the Fed also to an extent, because the banks will now cut down on the credit growth, right? So that itself helps in consumption being curbed. And that's what the ultimate aim of the Fed was, by increasing these rates to, curb the consumption frenzy in the US and probably bring on a slowdown, not a recession exactly, but a slowdown. And that's the base case that we're playing with. That's why we believe that even though the world will go through a choppy phase, and frankly, as you just now have said, that the oil prices have shot up thanks to the OPEC countries cutting off the supplies by probably 1 million barrels a day or something of that sort. The fact is that adds to the already choppiness in the market. And our belief is that because they've preempted that there's going to be a fall in demand in crude, and that's why they've taken that cut in the output as such, and maybe that's what they're looking out for. So our feel is that the world will be a bit of a choppy place to be in, and that's why probably a safe haven would be in India. But frankly, India is looking at a tight band in trade, because for India to start moving up, you need the world to stabilize, which is not going to happen for at least a couple of quarters.
Dinshaw, afternoon. So this tight band that Indian markets are likely to trade in, does it offer an attractive accumulation opportunity for you, or are you just going to hold on to your money and invest at a later stage, because it's not that the market is running away up or down?
right? Rima, actually, we love these kind of markets because we believe that these are the markets where we get an opportunity to pick our stocks, take our time to accumulate on them. In fact, that's what we've been telling our investors of late, that if you want to come into the markets today, we want them to come into the markets today, but stagger it out, right? Just stagger it out over, say, 5 months or so, because that's what you're going to do. We're going to identify our stocks, play around with them, as in accumulate them as in when we feel the prices are right to pick it up. In fact, you've seen that, right? The market started a high of 18, I'm talking about the year, per se, 18,300 odd, and went below 17 and now back again to 17 and a half or so. So it's obvious that they'll get enough opportunities to pick out the names that you like, and we've been sticking to those.
All right. Hi, Dinshaw. Dinshaw, give us some direction then. If this sort of a market, which is a little bit wobbly, is giving it a great chance to get into, what all have you all got into? In the recent past. In the past, you'll have mentioned a couple of stocks. I think a few months ago, we discussed a mid-cap IT company. I think that was L&T Infotech. We also discussed, I think, Campus. What else have you all picked up in the last few months in this sort of market volatility?
Well, Nigel, the mid-cap IT company isn't L&T Infotech, so you're wrong on that.
There was a mid-cap IT company we discussed in November.
Yeah, but it was
the name could be.
It was a travel-related, not mid-cap, probably a small-cap IT company, which was more to do with travel and stuff like that. So that was the name. Campus was there. Actually, we've been not adding to Campus. Actually, consumption names per se, we've not been adding to. Because we believe that things are not looking too ripe right now. Though we did chop off a few, not chop off, rather we chopped off the weightages in a few names in the consumption space. And we've not been in a hurry to add back to those, though we are very comfortable in the mid to long term. But I think the immediate short term, because of, as you mentioned earlier, El Nino may just pull back on the rural demand front. Even the urban demand is going through a stress today. So that's why we believe that it's better to stay out of these, stay away and probably build them up as and when you see the valuations really coming to screaming levels as such. So that's what we'll be doing here. But apart from that, we've been adding to the names where, like finance sector, we've been very comfortable there. We believe that though the call there that I think the whole market had taken was that the NIMs are peaking out, and that's why the growth may stagnate from here on. But our feel is that with the credit growth picking up, probably even a compressed NIM will compensate. The growth itself will compensate for those compressed NIMs. So that's where we're comfortable with. In fact, we've recently added to our portfolio in one other name, which is a NBFC in the mortgage space. So we've added there also as such, and we're more comfortable in that space today.
Dinshaw, hi, good afternoon. Since you're talking finance, of course, the next big talking point, especially for some of the NBFCs, retail-focused NBFCs, is going to be Jio's entry, right? With Jio Financial Services coming in with their massive balance sheet, big might. So how are you sort of preparing for that? And do you think that could start about a derating of sorts in stocks like, let's say, Bajaj Finance, which I think in the past you folks have liked quite a bit?
Yeah, actually, I agree with you, because I think there's some spaces where the valuations are totally stretched, like the name that you just took. I don't think those valuations can remain at those levels with a big name like a Reliance Jio coming into that space per se. So our feel is that, you have to be very careful in that space per se. And that's why I said that the ones which we are looking at, in fact, by the way, NBFCs, we hardly have any today. We just got 2 or 3 of them in our portfolio, and they're more or less related to non-consumer, rather non-retail kind of consumption space, and non-retail, right? So that's what we're looking at. So that's where we remain. And I think I'll leave it there.
And just a word on banks as well, since you're, staying more with banks than NBFCs, what's the preference here?
So basically in the bank space, we're looking at retail-focused banks, mainly private sector banks, though there's one big PSU also with us, which is more retail-focused than most of the other PSUs are. So that's where we are. And I think there we are more comfortable, because if you go back in history and if you see all these economies which have gone through a 5 trillion phase from 2 to 5 trillion, you'll see that it's the banking space which has really given that boost, not only for the capexes that came into the economy, but also in terms of the consumption boost which came about because of this. So that's why we are more comfortable here and we stick to that. In fact, our weight in the banking, the financial space itself is probably 40% plus today.
Dinshaw, great conversation. Thank you very much for joining in and enjoy your holiday tomorrow. Get into a break. On the other side, we'll tell you what dealing rooms are saying in our segment D Street Chatter.
अरे अभी तक मटेरियल आया नहीं। अरे सर पैसे नहीं है, मटेरियल कैसे आएगा? अच्छा
पैसे का आप भी टेंशन मत लो। यू ग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
हेलो किया, ओपन द सनरूफ प्लीज। सनरूफ ओपनिंग। Zoom zoom vroom vroom. Zoom zoom.
Open sunroof.
Zoom zoom vroom vroom. And a wee.
Designed so unique, everyone is inspired. Kia, movement that inspires.
Avalon Technologies Limited, one of the leading fully integrated electronic manufacturing services companies with a focus on high-value, precision-engineered products, now makes an initial public offer of equity shares with a face value of ₹2 each for cash at a premium. The 100% book-built offer being offered in a price band of ₹415 to ₹436 per equity share. Opens 3rd April 2023, closes 6th April 2023. For risk factors and more details, refer to the red herring prospectus.
All the markets trying to see if it can get into the midweek holiday around the 17,400 level, just 5 points shy of that. Let's bring in Mitesh again with some ideas. So practically at the highs of the session. Mitesh, what thoughts now? What's the strategy?
Yeah. So I think, one, as I said, stay long. Very clearly, I think there's no change in that sense. The market has moved up from the pullback or the intraday dip which happened. So I think the bias remains positive. In fact, I have, in line with that kind of view, I have two BTST ideas. Glenmark has been experiencing a very strong rally, so that's the BTST. Keep a stop at 474.5 and a target of around 488, 490 can be looked at for the day after tomorrow, because tomorrow I think is a holiday. And the other stock on my radar is HCL Tech. That's a BTST with the stop at 1090 for targets of 1110.
Okay, all right. Thanks a lot for that, Mitesh. By the way, the Nifty Bank has moved with the high point of the day. It's not the Nifty Bank that's playing out expiry today, the Nifty Financial Services Index. So just keep an eye on that. Well, a time to shift focus then to our special segment, D Street Chatter. Nimesh joins us as always. Nimesh, we're waiting to get into another weekend, but what are you picking up?
So, Nigel, the good part is that while the Nifty and the sensex may look a little range bound, a bit of consolidation, but there is a lot of momentum in the broader markets.
Yes.
And that's where the big momentum seems to be. I guess come new financial year, some bit of traction is back. H&A activity is picked up as well in the broader market. So that clearly shows up in a lot of the mid-cap gainers in today's trade. In terms of volumes, again, a mixed day from the larger institutions. But I guess one big feedback is there is a bit of contra buying now happening in the pharma names. So a lot of pharma stocks is getting accumulated is the feedback from the dealing rooms across the institution. So that's something to track going forward in terms of earnings as well. I guess, all of March we spoke about 16,800 as a big downside support. Now people are for the first time talking about the first resistance on the upside, that is 17,500.
Yes.
If that gets taken out, then maybe people are talking about 17,800, 17,900 as well in the April series. So clearly there has been a shift in terms of sentiment as well, and a bit of momentum is also back from the larger HNIs in the broader markets. I guess from a trigger point of view, the RBI policy this week, that will be a big macro trigger to watch out for, and of course the earnings season which kicks off next week, that will be a big trigger to watch out for. So come next week, I think the news flow will be much lower because a lot of companies will be in silent period. But I guess earnings will be important. But clearly the momentum seems to be with the bulls now, and there is a lot of traction in the broader markets.
Good to see some interest back in the markets, and particularly when the breadth of the market does well, then portfolios feel good. But Nimish, individual stocks, what are you picking up?
Okay, so in terms of individual names, the first stock on my list today is PI Industries. Marginally under pressure in today's trade, but again, the feedback there is maybe you're going to see a big corporate development very soon. The indication is that the company is very close to a acquisition in the pharma space, so that's something to track in PI Industries. So that's the first one. The second stock is Sona BLW. After a big block, normally you see a bit of consolidation, and now I guess the volumes have picked up, and the buying interest seems to be back at a leading FIS. So there is now some bit of buying traction from larger FIs in Sona BLW. So that's the second one. The third stock is Anantraj, a mid-cap stock. Stock is at a 52-week high, good volumes as well, and I guess there is a lot of activity at select HNI desk. But I guess from a trigger point of view, all eyes will be on the foray into the data center business. That's something which is likely to come very soon, and hence a bit of momentum in that stock in today's trade. And the last stock is Nykaa, again a platform company under pressure. This is one stock where every now and then you get a feedback of large selling pressure, and that's been the case today as well. So the delivery volumes are going to be quite high, and there is a lot of FI selling coming in Nykaa in today's trade.
All right, Nimish, thanks very much for that. On PI Industries, from what I recall, the management telling us they've been talking about doing an acquisition in the pharmaceutical space. And Nimish is pointing out that the street is sensing something. We'll keep an eye out on these names. Nimish, thanks very much for that. When the Nifty is almost at the high point of the day, so we started at 17,427 or so in the morning, and then the market did nothing. It sold off, middled around for the bulk of the day, and as we wrap up the day, after doing nothing all day, it's basically crept up back almost to the opening level. That's all that the market's done. Not quite there, but very close now to 17,427, 428 or so is the high for the day as well. Neeraj Dewan is with us, Director at Quantum Securities. Neeraj, good to have you with us here. Thanks very much. Any thoughts on MGL, which is selling off big time? We had, Mr. Kirit Parikh, who's of course recommended changes to the gas pricing formula. The street is disappointed that changes have already not been approved. But Mr. Parikh told us that he's very confident, at least he's very hopeful that they will happen. I mean, it's not happened in starting the new F5, but according to him, it could still happen. Your sense, MGL, IGL?
Yeah, good afternoon. Yeah, definitely the kind of price action that we're seeing today is suggesting some disappointment because the changes have not happened that we've been expecting. But I think, Mr. Kirit Parikh also said, I think the changes will happen sooner or later. So, you're seeing some correction in these stocks. If you see, about 5-10% correction, I think that's an opportunity. So among the two, I prefer IGL. That I think valuation-wise and the kind of growth target that they have going ahead looks more attractive, more promising. So I think any correction there should be an opportunity, but one should wait for a couple of days because market have also moved up in last couple of days. So one should wait for the next couple of days and see where the stocks are making a base and then take a call and put some money in.
Okay, thank you very much for that, Neeraj. In a sign of, the Indian audience accepting the digital medium to watch cricket, look at the numbers on, Jio Cinema. for the streaming of IPL. I think in the first weekend, what were those numbers? 147 crore?
147 crores.
147 crore people have streamed, IPL in this weekend itself. That's the number of video views. Absolutely smashing records.
I think the startling fact is that this exceeds the entire 2022 digital audience.
Yeah.
I mean, just the opening weekend, the number of sort of cumulative video views.
Football was also big. World Cup football for IPL was, Jio was also very big. But this is just, hit it out of the park. But let's, get to Sonia. She's got some numbers on this. Sonia.
Oh, absolutely. As you guys pointed out, it's been a cracker weekend for Jio Cinema with the number of views that have come in. Not just the video views, but also the number of app downloads have been breathtaking. So here are the stats. The opening weekend alone was bigger than IPL of 2022 on digital. We had 147 crore video views. Now, this is the number of times that the video was viewed on Jio Cinema. It was 147 crores. This is much higher than what we saw in all of the IPL last year. If you look at it, there was an average of 57 minutes per video per match, which is about 70% higher than what we saw in 2022. So per video per match as well, the average was about 57 minutes. Now, in terms of the app downloads, up until now, we've seen over 5 crores of app downloads come through. 2.5 crore of downloads happened just on March 31st, which was the most installed app in a single day. So on March 31st, Jio Cinemas was the most installed app in a single day, which is another milestone in itself. Now, we had some comments coming in from the Viacom 18 Sports CEO Anil Jairaj that said that this is the evidence of a digital revolution sweeping through the country. Digital is targetable, addressable and interactive, and not just 5 crore new app downloads, but they had over 10 crore new viewers as well up until now in the opening weekend. So some breathtaking numbers coming through for Jio Cinemas. Back to you.
All right, and the numbers will keep rolling in as the IPL progresses. Sonia, thanks very much for that. Now, the new financial year is kicked off, right? And what we also have to note is all the new changes to, taxation. A lot of changes have been made, some here, some there. Surabhi has put all of that together for you and for all of us. Surabhi, which are the big ones?
Well, the new financial year has ushered in several tax changes, and here are the most important, around 8 at last count. Well, the first one is the sweetened form of the new income tax regime, which is now the default regime for all taxpayers unless one explicitly opts for the old regime. The tax slabs are in front of you. We're talking about 5 slabs. The basic exemption limit in the new regime has been hiked to 3 lakh rupees. So that's the first sweetener. The new regime now offers a tax rebate of 25,000 rupees under Section 87A on income up to 7 lakhs. Earlier, this was 5 lakhs. Now, in the new regime, it is applicable up to 7 lakhs. So what does it do? It actually, in effect, means that there will be nil tax liability for those having taxable income up to this threshold of 7 lakh rupees. Rebate under the old regime continues to be at 12,500. And that is applicable only to an income threshold of 5 lakhs. The new regime also offers the sweetener of standard deduction, so 50,000 rupees, making it at par with the old regime. Now, if you're wondering which is the more tax-friendly regime to follow, well, here's a broad rule of thumb. If the total deductions that you enjoy are over 3,70,000, 3,75,000, then you might actually be better off in the old regime. Check out this example. For a sort of quick run through. We've taken an income level of 15 lakh rupees. Both the regimes have standard deductions. So the taxable income comes down to 14 lakhs 50,000 rupees. In this example, we've considered that the individual has taken the benefits of deductions under 80C, 80D, which is your health insurance, as well as home loan interest, which is Section 24. So total deductions of 4 lakh rupees. The answer is very clear over here. The taxable income comes down substantially in the old regime, and the total tax outgo in the old regime is 1,27,500. In the new regime, it's 1,40,000 rupees. So one needs to basically do their numbers. If your total deductions are exceeding 3,70,000, that's the ballpark reason. Now, the high earners, they have a reason to cheer, as the new regime offers a lower peak surcharge rate of 25% versus the 37% peak rate under the old regime. This effectively lowers the tax for those earning rupees 2 crores or higher from nearly 43% earlier to 39%. However, there is no reduction in surcharge rates under the old regime. Now, that's all about personal income tax. Let's move on and talk about the biggest googly of Budget 2023, which actually came in via the amendments to the finance bill. From April 1 of 2023, any mutual fund that doesn't have at least 35% of its assets invested in domestic listed equity, it will be taxed at slab rates and not the 20% rate, along with the indexation benefit which such mutual funds enjoyed if the investor had remained invested for 3 years. This move will in effect increase the tax incidence, not just on debt mutual funds, but also we're talking about gold funds, we're talking about funds that are investing in overseas equity. Let's come to the third key tax change, insurance. The new fiscal takes away the tax efficiency of high-value life insurance policies. Now, income from non-ULIP policies having an annual premium of 5 lakh or above will be taxed at slab rates. However, the payout upon death of the insured in such cases remains tax-free. The fourth major tax change that's come in this financial year, this pertains to market-linked debentures, or MLDs as they're called. The government has taken away the benefit of long-term capital gains tax regime that was applicable to MLDs till last year. Now, this year onwards, income from MLDs will be taxed as short-term capital gains. Basically, that means at your slab rates. Coming to the fifth key tax change, if you want to save tax on capital gains arising from the sale of a property or any other long-term asset by reinvesting those gains in property, the new fiscal year caps that tax relief at just 10 crore rupees and no more. The sixth important tax change is higher tax on remittances under the LRS, or the Liberalized Remittance Scheme. Barring remittances for education or medical treatment, the TCS, or the tax collected at source, on all other payouts has been hiked from 5% all the way up to 20%. Well, we've given you lots of bad news, so let's end with some good pieces as well. Winding up with the senior citizen scheme. Now, senior citizens can invest up to 30 lakhs in this scheme, the senior citizen scheme. That's a doubling of the earlier cap of just about 15 lakhs. The government has also made it easier to convert physical gold into e-gold and vice versa. Such conversions will not be treated as capital gains, and therefore there will be no capital gains tax incidence on them. So there you have it. 8 key tax changes which will probably impact your life and mine in FY24.
All right, that's a long list. Surabhi, thanks very much for that, but important to note. Well, time for a quick break here. There is 5 minutes to go for markets closing, and I think the index is still there. I mean, 40 points higher, hesitating, not quite at the day's high. Stay with us, we're back.
ना इधर ना उधर, इस बार टाटा IPL सिर्फ जियो सिनेमा पर।
Avalon Technologies Limited, one of the leading fully integrated electronic manufacturing services companies with a focus on high-value, precision-engineered products, now makes an initial public offer of equity shares with a face value of 2 rupees each for cash at a premium. The 100% book-built offer being offered in a price band of 415 to 436 rupees per equity share. Opens 3rd April 2023, closes 6th April 2023. For risk factors and more details, refer to the red herring prospectus.
इस हाईवे पे ना मेरा गांव दिखता है। अच्छा दिखाऊंगा अभी देखना। वो मेरा गांव, वो देखो। अच्छा दिख रहा है। वो जो बाग है ना, वहाँ बचपन में आम तोड़ खाया करते थे। आम तो कई प्रकार के होते हैं। वो मेरा घर वो देखो। अरे यार वो सफेद वाला। सफेद तो कई है वहाँ। अरे वो सबसे सफेद जिसमें खिड़की है। खिड़की तो सब में है वहाँ। अरे है ना यार वो। कौन सा? वो यार।
टाटा ट्रक्स लाए हैं कोलिशन मिटिगेशन सिस्टम। ध्यान भटकने और ट्रक के सामने किसी के भी ज्यादा पास आने पर ट्रक की एडवांस टेक्नोलॉजी नियंत्रण लेकर एक्सीडेंट होने से बचाती है, ताकि आप और आपका ट्रक दोनों सेफ रहें। अब सेफ्टी होगी और भी ज्यादा। टाटा ट्रक्स, देश के ट्रक्स।
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। ऑर्डर छोटा हो या बड़ा या कार्ट में पड़ा, कोई वैल्यू या सेगमेंट या कोई भी टाइप, ब्रोकरेज को लेकर अब नो मोर हाई। और सुन, 2 लाख के स्टॉक्स या 2000 इन्वेस्ट मर्जी से करो यार। ना लगे कैलकुलेटर, ना लगेगा पेन। अल्ट्रा ट्रेडर पैक से होगा ब्रोकरेज सिर्फ ₹10।
कमीशन की टेंशन छोड़ो, 5 पैसा से रिश्ता जोड़ो। विद 5 पैसा's अल्ट्रा ट्रेडर पैक, ब्रोकरेज होगी सिर्फ ₹10 फ्लैट। बीट दैट।
ऐसे करते हैं ट्रेड.
सोच मत छोटे, इंस्टॉल मार.
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Okay, welcome back. Just 2 minutes to go for market closing, and we are going to end near the high point of the day after middling through most of the session. Banks, I think the Nifty Bank will come up on your screen, and that I think will also be up a 0.5%. Actually, banks will close better. The Bank Nifty has been better as compared to the Nifty for the last 3 or 4 sessions, and I think today is no different once again. In terms of sectors, some up, some down, very mixed kind of picture, and I don't think there are any real big takeaways. Lots of single stock movers, though, from the city gas space, one brokerage downgrade like KPIT. So, yeah, I mean, individual moves quite a bit, but in terms of a trend or something to really take forward as a theme in terms of what happened today, I think one would really struggle. Tomorrow, of course, is a market holiday, so I think we'll get the aggregate market volumes as compared to the average, but I think volumes would be a little thinner than usual. Rima.
Well, almost getting to that 17,400 mark by the close of trade. Sectorally, autos did well. The Nifty Auto Index up 1.5% as the March sales numbers were not so bad. PSU banks outperformed the private sector banks, so the Nifty PSU Banking Index was up nearly 1%. In individual stocks which did well on the way up, as I said, autos across the board. So whether it's Maruti, it's Tata Motors, M&M, these stocks continue to take higher. So you had strength coming through on that. Apart from that, on the gaining side, you had Coal India, Divi's Laboratory, ONGC, Bajaj Finance made a big up move towards the end of trade. On the losing side, IT was on the back foot, Infosys ending with a cut of more than 1%. ITC HUL weak, lost nearly 1%. But in the IT pack, it's KPIT Tech, right? The sharp Goldman Sachs downgrade.
Oh, absolutely. That was the big mover of the day. The oil and gas story played out. So you have a BPCL on the downside with the surge in crude oil prices. ONGC and Oil India, the upstream producers, they did much better, up about 2 to 4% depending on which stock you're checking up. And the city gas distribution plays, there was disappointment there because of the delay in the implementation of the Kirit Parikh committee recommendations. Mahanagar Gas down 6%, even IGL was down about 2%. Global Health, Medanta Hospitals down 5%. There was some confusion whether there's a new rule in Haryana that asks for reservation or higher number of beds to be reserved basically for the economically weaker sections. That was a stock under pressure. The gainers of the day, RVNL, Tejas on good order wins, Dhanlakshmi Bank on a good quarterly update, CSB Bank, again a good quarterly update coming through from there, Ashoka Buildcon, more orders. So the mid-cap market overall managed to see a fair amount of traction, actually outperforming the Nifty and the Sensex today.
Okay, 17,399. That's the final rate on the Nifty. So not quite at that 17,400 mark. It's a wrap and closing bell. Don't go anywhere. Our special offering, Commodity Champions, comes up next.